All right, we are live.
All right, good morning, everyone. My name is Esther Mannheimer, and I'm Mayor of the City of Asheville, and welcome to the Policy, Finance, and HR remote meeting. This is September 10th, 2024. All council committee members and staff are participating virtually. To help our audience follow along, I'll state each section of the agenda aloud. We are streaming live on our virtual engagement hub, which is accessible through the virtual engagement hub link on the front page of the city's website. We also have an option for the public to listen live by phone at 855-925-2801, meeting code 5257. For those of you out there with us today, welcome. For today's meeting, we have the option for people to call in and comment live during the meeting. To call in and comment live, use the same number I mentioned before, 855-925-2801 and meeting code 5257. Your phone will be muted and you will hear the meeting live. At this point, speakers will need to push *3 to enter the speaker queue. I'll now go through and introduce all committee members and staff who are participating virtually. Council staff, when I call your name, please say a quick hello. Councilwoman Maggie Ullman.
Good morning.
Councilwoman Kim Roney.
Hello.
City Manager Deborah Campbell.
Good morning.
City Attorney John Maddox.
Good morning.
Director of Finance Tony McDowell.
Good morning, everybody.
Assistant Finance Director Becky Ogles.
Good morning.
Strategic Services Manager Frank McGowan.
Good morning.
Internal Audit Program Manager Lauren Brune.
Good morning.
And Assistant to the City Manager Jamie Matthews.
Good morning.
Okay. All right. So the first item on our agenda is approval of the August 29, 2024 minutes. Do I have a motion to approve the minutes?
So moved. Second.
Okay. We have a motion and a second. I'll do a roll call vote. Councilwoman Kim Roney.
Aye.
Councilwoman Maggie Ullman.
Aye.
And myself, aye. So the minutes are adopted. Next on our agenda is the committee work plan discussion. I'm going to turn it over to the City Manager, Deborah Campbell.
Thank you, Mayor, and good morning again. And staff, you could bring the presentation up. As you all may recall, at your August the 29th meeting, we had a discussion, general discussion of the Policy, Finance, and Human Resources Council Committee work plan, just listing of things that we would be working on over the coming months. What I hope we can accomplish today is to finalize, and when I say final, I don't mean that or to infer that this is the only time that you will be able to discuss items that aren't on this agenda or scheduled out for us to discuss. It just gives us an opportunity to look at the new things potentially may come to us. We look at it in the context of current or previous commitments, and then we're able to align that with staff resources and the like. So next slide. This is, I'm going to quickly review because we went into a lot more detail in your August 29th meeting with regards to kind of the why are we doing this. It serves as a tool to plan and help us organize our work. It allows us to create that alignment between your Vision 2036 framework, your strategic priorities that you develop annually in concert with your goal statements. And we have an idea, or you all have an idea of the work that you are committing to over the next coming months. It also helps us create that synergy, that focus with any advisory boards and committees that may be aligned with this committee. And as I said earlier, these are dynamic documents. They can change, things will adjust. We always know that things come up, and obviously we can make those adjustments. we feel much better in the context of having this listing of things that we are generally committing to. And so what I want to do is to provide that list of items that will be coming to you over the next several months. And hopefully we can get agreement that this is our work plan. Next slide, please. And as I said, the alignment, and again, I'm not going to go through all of this, your 2036 vision work framework, your strategic priorities, and your priority goals. Next slide, please. At our last meeting on August the 29th, we had a discussion about kind of the general kind of topics that will come to this committee, and they are listed. I highlighted a couple of them because based on our discussion, I think that there was some interest that we add some of the items that are highlighted in yellow. And financial reporting, I think what is highlighted is more like policies and updates, and it's the policy side that I think is the addition. And over the coming months, Tony will be providing you with additional information about the context of those policies. Applicable human resources policies, I think that we had added that in our last conversation. And then I believe there was federal and state legislative. You had the agenda, but you also wanted information about issues, concerns, and funding opportunities. And hopefully I captured, or we captured those items that we discussed at our last meeting. And hopefully you will see them reflected in the outline of the upcoming items and schedule of items to be discussed. Next slide, please. And so your linkage with other advisory boards is pretty much the audit committee, but there may be items that come to this committee that we may need some connection. You may request that another advisory board review and make recommendations. So I just added others as needed as a highlighted addition. Next slide. And so the crescendo, and this is kind of your list of things that will be coming to the committee over the next couple of months. We schedule it out to December, but you can see that we have a number of other pending items. Some of those are recurring items like updates, financial updates, even the discussion about compensation. So we have September, which is where we are today. We have a number of those items that you will be discussing just later in this meeting. But for October, we're looking at a Q1 financial report, the audit update, beginning our discussion about total compensation and benefits, that discussion around the philosophy of how we compensate our employees. And then you will have a recurring conversation about GO bonds. This will be the month before the actual vote on the referendum. And in November, we have exclusively reserved that for the audit presentation where the consultants will come in, our auditors will come in and provide you with the audit report. And that's a joint meeting with the audit committee, which is your link to the advisory board. And then in December it'll be all things kind of budget and continuing our total compensation and benefits compensation. By then we should be able to have some kind of update around federal and state legislative, financial budget actions, discussion about potentially the legislative agenda. But we'll see, and we'll continue to update you as time goes along. And then hopefully we will be having a discussion about a successful GO bond referendum and beginning more detailed discussion about the process of implementation and all the actions that are needed as it relates to a GO bond. And then you have a number of other pending items that I'm not going to going to go through in terms of that list, but it is a fairly long list of things that will potentially need your attention in the calendar year of 2025. So I will stop there to see if you all have questions, and if staff, if you could leave this slide up so they can review, and then we'll go to the next slide afterwards. Any questions?
It looks good. Thank you.
Oh, you're welcome. Any other? Okay, good deal. All right, so next slide. And so this is generally the schedule. We did our August 29th, which was the initial conversation. We're here today to kind of finalize that work plan. We will communicate with our advisory board, in particular the audit committee, and as needed, we will provide you with updates, and annual reports will come to you, mainly again from the audit committee. Next slide. And so I won't go over the key takeaways again, but I hope that this reflects our conversations. And as I said, this is far from final. As things come up, again, we can address those in the context of commitments that we have made with regards to this work plan. So this will be our lens that review the next several months in terms of subject matters that have come to this committee. And with that, I will conclude the presentation if there are no further questions. Mayor, I turn it back over to you.
Okay, thank you. And I've got to get back to my agenda, sorry.
It's okay.
Okay, so that was the presentation about our work plan, and I note that Ms. Campbell, you all are doing that overview with each of the subcommittees of council so that everyone has kind of a clear idea about what the work will be for this next year. Next is the internal audit plan and program update, and we have Lauren Brune, Finance and Management Services with Finance and Management Services here to make this presentation according to my agenda.
Yes, thank you, Mayor. Good morning, members of the committee. My name is Lauren Brune, and I serve as the Internal Audit Program Manager in the Finance and Management Services Department. Next slide, please. So our key takeaways for today are the following. The internal audit program is now fully staffed, and the city has contracted with a vendor to perform audits using the risk assessment from 2023 as a roadmap. The goal is to perform 4 internal audits this year, this calendar year of 2024. An internal audit policy has been developed. That's an administrative policy for internal use. And lastly, the city's employee ethics and compliance hotline is getting renewed attention and is being promoted internally. So we'll go into more detail about each of these points in the coming slides. Next slide, please. I'll begin with the objectives of the internal audit program. The internal audit function is a best practice for local governments according to the Government Finance Officers Association. So first, we identify areas of high risk, whether they're financial, compliance, or operational. The internal audit firm will engage in a deeper dive to identify root causes via coordination with the internal audit program manager. And that firm will provide findings and recommendations to mitigate any identified issues. And then the internal audit program manager, which is the role I'm serving in, will track audit recommendations to completion, sharing progress with the city manager's office, resulting in improved operations and or compliance within the operation. Next slide, please. Here's some history about the internal audit program, or how we got to where we are now. So the prior internal auditor left the organization in October of 2021, but even before her departure from the city, she had been managing American Rescue Plan Act funding, which left less capacity to focus on internal audit work. The finance department also faced challenges recruiting from the internal audit field for the next couple of years, and so they made the decision to proceed with a co-sourced internal audit model in the fall of 2023. So that co-sourced model is blending city staff with resources from a third-party service provider. So Jefferson Wells was engaged as that third-party service provider in January of 2024 to conduct those internal audits. And then the internal auditor position was restructured into the internal audit program manager to provide dedicated in-house staff to work with Jefferson Wells and provide follow-up on their audit findings and recommendations. So I started in this role in February of this year. Next slide, please. This is an overview of the internal audit program. So as I mentioned, the risk assessment was completed in February of 2023 by our external audit firm, Cherry Becker, and that serves as the roadmap for the internal audit engagements. That risk assessment is being used as a guiding document, and that project was on the fiscal year 2023 organizational work plan as well. The strategic service manager in the finance department supervises the internal audit program, and the internal audit program manager acts as the liaison between Jefferson Wells and the operation being audited, as well as tracking responses to and completion of recommendations of the internal audits. Next slide, please. So this is the audit plan for 2024. We began with an audit of the Harris Cherokee Center and the fleet operations as well. So those were the highest risk areas identified in that risk assessment by Cherry Becker. Both of those draft reports are nearing completion, and we plan to present the audit reports for both the Harris Cherokee Center and the fleet operations audit projects at the October meeting of the audit committee, as well as at the joint meeting of the audit committee and this committee in November. The third audit we're pursuing is a grant management and compliance audit, which is a process review to ensure compliance with grant requirements with the city as the grantor. So we're currently in the process of drafting the scope and the engagement letter with Jefferson Wells for that audit. Next slide, please. Now I'll transition to some administrative aspects of the program, beginning with the development of the internal audit policy. So I developed this administrative policy, benchmarking internal audit policies and charters from other North Carolina municipalities. And some of the most influential ones I looked at were those from the city of Durham, Winston-Salem, and Fayetteville. And from there, I developed an administrative policy that was reviewed by key staff and approved by the city manager. So that is linked there as part of the meeting materials from the last audit committee meeting. Next slide, please. The ethics and compliance hotline, as I mentioned, has also gotten renewed attention. So we have renewed our contract with the third party that manages that hotline. Concerns about employee ethics or policy violations can be reported through that hotline anonymously if the reporter desires to be so. And the internal audit program manager will route concerns for follow-up until they are resolved or closed out. So we kind of relaunched that program internally to make sure employees were aware of the hotline's availability. I developed some promotional posters that have been distributed internally, and also developed revitalized the external website, which specifies the types of matters that should be reported through the hotline versus through other avenues like customer service or the Asheville app. So that should streamline the cases that come through the hotline as well. Next slide, please. Finally, here is a summary of activity that came through the ethics hotline so far in 2024. So we've seen light traffic from the hotline, 15 cases since January, and 7 of those were personnel matters and were handled by department leadership and or HR. 5 of those should have been reported through some of the other avenues I mentioned. And 9 of those were submitted by residents, 3 by employees, and 3 were anonymous, so we couldn't tell where those were coming from. But a summary of those cases was requested at the last audit committee meeting, so that has been provided as well. And all of those cases have since been resolved and closed. Next slide, please. So once again, our key takeaways, I won't go through them all in detail. But that is a summary of the internal audit program and our activities so far this year. And if anyone has any questions, I'll be happy to take them.
I don't have any questions, but I did just Google this hotline so that if folks that are watching or curious on how to get it, is it pretty easy to find, just with City of Asheville Ethics Hotline.
Thank you.
Any other questions? Well, thank you very much for the presentation. Okay, moving along to the next item on our agenda. It is the fiscal year 2024 external audit update. And I've got Tony McDowell and Becky Ogles with our Finance and Management Services are going to tag team us here, I guess, on this presentation.
Yeah, good morning, Mayor and council members. And actually, I'm going to go ahead, I think, and just turn it over to Becky Ogles, our Assistant Finance Director, to run through the slides with you all, and then happy to answer any questions at the end. We can go to the next slide.
Thanks, Tony. So just a couple key takeaways. So year-end audit is underway and will continue through the end of October. This is our second year with Cherry Beckert. We anticipate we'll do a 5-year engagement with them, but we can always change just depending on the results, maybe not the results of the audit, but just the relationship for the next couple of years. And then we just wanted to outline just the importance of the year-end audit and the submission to the LGC because it is critical that we get it done in a timely manner to make sure that we can still issue debt and maintain our credit ratings. So next slide, please. So there's been a lot of work that has already been underway. We've done some internal fieldwork testing, a bunch of other things. This is just kind of an outline of our audit calendar. Right now, we're kind of in really the depths of it. We got a trial balance to our auditors yesterday, and we are working through some of the main fieldwork testing. Our goal, of course, always is October 31st to have it submitted to the LGC. And then, of course, we will do, as mentioned prior, the combined Policy, Finance, and HR and Audit Committee meeting, and then we will on November 12th, and then we will also present to the audit or to the full council, my apologies, on December 10th. So next slide. So yeah, so we kicked off with Cherry Beckert at the beginning of April, which honestly I think is the earliest that we've ever started audit. Seems like a full year-round process anymore, but we kind of established the year-end calendar deadlines and procedures that were shared citywide. This just helps us make sure that we get everything done in a timely manner internally so that we can provide it to our external auditors. The two programs that they are looking at for grants are the ARPA dollars and Powell Bill. Those are our two big dollar value grants on both the federal and the state side. So honestly, those are looked at pretty much every year at this point. They've also done a whole lot of walkthroughs just to learn our processes and such. They also did a couple of fraud interviews, I believe, with some of the people on this call. And then just some interim testing. We've updated some parts of our ACFR that they suggested last year that Tony and I had a chance to kind of really go through and kind of shore up some of the wording and such on things. We've done petty cash inventory audits, and of course we opened fiscal year 25. So we just keep on moving forward. Next slide, please. Kind of things that we're doing right now. As I mentioned, we got a trial balance to them yesterday. We will continue to review that and kind of do any additional journal entries that we need or updates that we need, just kind of as information still gets to us. We kind of do that throughout the month of September. We will start drafting financial statements and notes. We'll continue to review those. They're still doing some testing. And then, of course, we'll do every review possible to make sure it's as accurate and complete as possible before we do our submission in October. Next slide. So yeah, that's kind of where we are right now. We are on track for October 31st for submissions. There's a lot of things due every single week, and we will keep you guys updated on anything that might come out of it. But we are hoping for a clean audit, and we are hoping for an October 31st submission.
Thanks, Becky. And I'll just jump in quickly to add on to what Becky presented. And it's really about that final bullet on this slide, and it's the importance of this work. As you all know, as we go through the budget process every year, you all are very engaged with that. There's a lot of communication around it. But this process that we do at the end of the fiscal year is equally important as well. And in some ways, even more important because the document, the audit that's done and the annual comprehensive financial report that's produced as a part of that process, those are really the key documents that the LGC looks at, that our debt rating agencies look at, that banks look at when we're going out and borrowing money. And we're going to be talking a little bit about our debt in our next agenda item. And so, again, just really want to kind of highlight the importance of the work that's getting done now, because I think sometimes it kind of falls off the radar a little bit, but it is very, very important work. And that end of year financial document that gets presented or prepared and presented to you all, also a very important document. There's a lot of information in there. I know sometimes it's a little hard to decipher because it's written for accountants in many ways. But I know there's been some questions in the last few months about our grants, for example, and there's information in there on all of our grants and all the money that we received both from federal and state grant sources last fiscal year. So folks can dive in and take a look at that. There's also information. We had a presentation from Cheryl, our interim HR director, at the last meeting about a potential or the potential new retiree health program that we're going to start in January. And I know you all had some questions about projecting out the long-term liability associated with that. All of that information is in our financial reports. We actually have to engage actuaries each year as a part of this process to update that information. So all that information is in the report as well. So again, just wanted to highlight the importance of the work and all the time and effort that Becky and her team put into this. So with that, and Becky and I'll be happy to take any questions you might have.
No questions, just thank you.
The only other thing that I would add is, as part of your 2036, your vision framework is financially resilient city, which means that we are capable of weathering the storm when there's economic downturns or whatever that is. And this information helps us understand and positions us, I think, in the best financial situation. And if there is one thing that can hurt the economic credibility and economic development opportunities of a community, is when it has all of these financial challenges. And so this has reputational risk as well, in terms of when the words gets out that they're not responsible, they don't manage money appropriately. It can hurt us. And so again, just trying to reinforce Tony's message about how important this is. And like you said, Tony, some of this information really is a sleeper. There's numbers and there's all this language, but it's incredibly important that we be fiscally resilient and that we be financially healthy. And that's what we're striving for. Thanks, Tony and Becky.
Thank you. Okay, rolling into the next item. Tony McDowell's going to talk to us about the fiscal year 2025 debt issuances. Speaking of fiscal health and responsibility, let's talk about debt.
Yeah, thanks, Mayor, and thanks for the segue. That was a perfect segue into this. So we want to do a short presentation this morning on the city's debt program as it relates to our capital improvement program. Primarily because there's a lot going on in terms of debt issuances, and there's a lot of actions that have already come to City Council this fiscal year, and there's going to be more that are coming. So we wanted to take a few minutes with you all this morning to do a little bit of a deeper dive on our debt program, let you all ask questions if necessary, and highlight some of the things that are going to be coming forward to you all over the next few months. So Talia, you can go to the next slide. So key takeaways for today's presentation. The city, I think, as you all know, utilizes a fairly sophisticated multi-year debt model to help fund our capital improvement program. You all have met our outside financial advisors from DEC. They have come and present to you all a number of times, either at this committee or at the council level. And they provide us with invaluable help in terms of modeling out our multi-year program, helping us estimate cash flows for our capital projects. And that's really the key part of this, because that those cash flows and the timing of how we spend money really dictates the timing of our debt issuances as well. And I'll go into that a little more as we go into the next few slides. Each time the city issues debt, it requires approval by the local government commission, the LGC, and they require certain steps be taken as a part of that process, and that includes city council approval of each debt issuance. And as I said, there are several debt issuances that are coming to you all this year, so we wanted to kind of highlight those for you and give you a chance to answer or ask any questions you might have about those. So next slide, please. So before we kind of get into the specifics of the FY25 debt issuances, we want to just kind of give you all a kind of a brief overview, kind of a debt 101, if you will. So you can go to the next slide, Talia. So purposes and objectives of debt. So here in North Carolina, local governments can issue debt to fund capital expenditures, but not operating costs. The issuance of debt is the primary method that we use to fund our CIP, as I mentioned, in combination with pay-as-you-go funding and grants. Each time we issue debt, like I said, we work with our financial advisors. We do the multi-year cash flow analysis that looks at our revenues, our expenses, our capital outlays, and allows us to determine the appropriate levels of debt so that we don't take on too much debt for a city of our size. And the LGC and the debt rating agencies, both Moody's and Standard and Poor's, review our debt levels each time we do a new debt issuance to make sure we're in compliance and have debt levels that are similar to our peer cities across the state and across the nation.
And Tony, before you advance this slide, can you explain pay-as-you-go funding?
Oh, sure, absolutely. So pay-as-you-go funding is cash funding that comes over from our general fund each year, or in some cases from in enterprise funds. For example, the water fund makes a cash outlay toward the capital improvement program every year, and that's again a key part of our CIP funding as well. Primarily, most of our CIP in the general fund is funded with debt and grants. Pay-as-you-go funding is primarily used more in like our water fund and our stormwater fund and our parking fund. So. Okay, next slide, please. So why do we use debt to fund capital projects? One thing it does is it smooths out cash flows. So obviously, if you're talking about funding a really large capital project, for example, in McCormick Field, that is costing somewhere in the neighborhood of $30 to $35 million, you don't want to have to pay out all that money at one time, so it avoids large spikes in your cash flows and allows you to extend out the repayment of those projects over a period of time. And then it allows you to borrow funds only if they're spent on capital projects. So what we do with our cash flow modeling is instead of issuing the debt up front, we do these short-term 2-year loans, and I'll talk a little bit more about that on the next slides. And then we draw down money as we're spending it. So instead of issuing, let's say, $42 million worth of debt on day one to fund our capital projects, we hold off on doing that. We establish a bank loan. We only draw down what we use as we're spending on those projects. And then we wait and issue the long-term debt after we have fully spent the amount. And you'll see that as an example on the LOBS issuance that we're going to talk about here in a few minutes. The other thing that's important to keep in mind in terms of why you want to use debt is it also matches up the useful life of the asset to the payment of the asset. And for here, I'll use the example of the Broadway Public Safety Station, which was just finished. It's hopefully going to have a very long useful life, be an asset to the community for many, many years. And so by utilizing debt to pay for it and paying that debt back over 20 years, the residents of Asheville over the next 20 years are going to be paying back that debt and paying for that facility, as opposed to the residents who are here today. If we paid for it with purely pay-as-you-go money, then all the residents today would pay the full cost of that, whereas future residents would not pay into that. So it's better to stretch it out over time and allow residents to pay for it over time. Next slide, please. And as I mentioned, we use this cash flow approach to financing our capital improvement program. And specifically what we do is we issue these short-term bond anticipation notes, and those essentially function as bank loans. So we go to a bank, we do an RFP, we look at the rates that they're offered, we take whatever the best rate that is offered by the banks are, we establish these 2-year construction loans, and then as we spend on capital projects, we reimburse ourselves from these loans on a quarterly basis. And then typically after about 2 years or so, once a significant amount of spending has taken place, we refund these short-term loans and turn them into long-term bonds. And those are usually over 20, we usually pay those back over a 20-year time period. All right, next slide, please. So some examples of the types of debt that Asheville uses, and this is not an exhaustive list, but these are the types of debt issuances that I think you all are going to be seeing over the next couple of years. Obviously, you're very familiar with the GEO bonds and the conversations that we've had about those with the upcoming November 2024 vote about to happen. But just some key things to know about GEO bonds: they are voter approved. It's the only type of debt on this list that is voter approved. Once they have been approved by voters, the city has 7 years to issue that debt. The debt is backed by what's called the full faith and credit of the city. And essentially what that means is with voter approval, city council pledges to essentially do whatever it takes to pay the debt back. So if that required a tax rate increase, then city council would be required to do that. The LGC could actually step in and make the city do that if necessary. Of course, that won't happen in our case. We're already talking about the potential tax rate adjustment that might have to happen during next year's budget process if the GEO bonds pass this year. But because the GEO bonds pledge the full faith and credit of an organization, they typically come with the lowest interest costs. And so that's really the key. That's the primary reason why local governments utilize GEO bonds as opposed to other types of debt is that they do have those the lower interest rates than the other types. The second type of debt you hear us talk about a lot is something called limited obligation bonds, or LOBs. These are the primary debt method that we use to fund our CIP. The action that you all have on your agenda tonight, the public hearing, relates to a LOBs issuance, and I'll talk a little bit more about that on the next slide. They do come with a slightly higher interest rate than GEO bonds, but there's not much of a spread there right now. And because they're not voter approved, then we have to set aside collateral as protection for the lender, or for the borrowers in this case. And that's usually city-owned properties such as City Hall, the municipal building, or the Public Works building. Next slide, please. A couple more types of debt to highlight. Water revenue bonds. You all approved the issuance of some water revenue bonds at an earlier meeting this fiscal year. Those bonds are backed by revenue from the water system, which means we have to meet certain bond requirements, and we have to meet those requirements over an extended period of time. And so that's one of the reasons why we spent so much time talking to you all last year about water rates and modeling those water rates out on a multi-year basis, because when we go to issue debt and we work with the LGC and we work with the debt rating agencies, they want to see those long-term plans, and they want to see that we have rate adjustments in place that will allow us to not only bring in enough revenue to pay for the operation of the water system, but also to meet the bond coverage requirements that they put in place as well. One thing that's a little bit different about revenue bonds is you can actually extend those out further than 20 years. The LGC currently requires all GEO bond and all LOBs debt to be issued over 20 years. But with revenue bonds, you can extend payment of those out over 30 years. So that's one of the slight differences about that type of debt. And then finally, the last one I wanted to highlight is something called installment loans. This is something we use to fund our vehicles, our technology, and other equipment. It functions very much like the type of loan you would take out when you purchase a car. It does not require LGC approval. We usually pay those back over 48 or 59 months, so roughly 4 to 6 years. And again, this is a direct loan that we have with a bank, as opposed to the other types of debt where we actually go out in the market and issue those debt to bond buyers. So next slide, please. So before I get into the specific FY25 debt, I'll pause for questions. I see Councilmember Roney has one.
Thank you, Tony. Regarding our installment projects, I know this is like tangential, but I feel like it's connected for our long-term planning. Do we have a policy or a series of policies around procurement for vehicles? Because I know we were gonna have one for our bus fleet that showed sort of a long-term projection of how we were staying on track with making sure that we had equipment. But there have been conversations in the community about the other kinds of vehicle procurement. And if we have a policy or a set of policies around that, it would be helpful to know what like our long-term strategy is for replacement.
Gotcha. Yeah, and so just a quick note on those. So actually, because the useful life of the buses is longer than the 5 to 6 years, we usually utilize the LOBS financing for those as opposed to the equipment loans. The equipment loans we use primarily for like police vehicles, other light use vehicles, sanitation vehicles, and things like that. And so, and I'm not sure if this completely answers your question, but the way the process works right now is each year we budget a certain amount within the CIP for vehicle and equipment replacement. Our fleet manager works with the departments to determine the priority vehicles, the ones they're the oldest, that have the highest cost of operation, and works to get those replaced, and kind of works their way through that list each year. So so that's kind of how that is approached, and he works closely with our purchasing department and our sustainability team as well to make sure we take advantage of green opportunities when available as well. So
that was part of my question. Was I know there's some new technology around electric trucks, and sometimes the lead time on being able to procure them is a little bit longer, but if they last longer, it's a good investment for our community. It helps us meet our carbon reduction goals. So any like set of policies around our vehicle procurement and our plan for replacing them in a timely fashion would just be so helpful in piecing this whole conversation together. So I, for one, would appreciate being able to see those.
any other questions so far? All right, we can move on to the next slide. So to talk a little bit specifically about the debt issuances that you all are going to be seeing this year, and a little bit about how we'll proceed with the GO bond debt if that is approved in November. You can go to the next slide. So just a little information about the process that we have to go through with the LGC. And it's a lengthy process. There's a lot of paperwork involved, a lot of meetings that Becky and I have with our bond counsel, with our financial advisors, underwriters. There's a whole team that we work with each time we issue debt. It does take about 3 or 4 months to actually make this happen from the day we say, all right, we want to issue this debt, and have the kickoff meeting with the LGC to the actual closing on the debt. It's a 3 to 4 month process. It generally involves multiple actions by you all at the city council level. Usually there's an initial resolution that you all have to pass. Sometimes, depending on the type of debt we're issuing, we have to have a public hearing. And then finally, the approving resolution, which is the final step from you all that allows us to move forward with going to the LGC. The LGC commission meets once a month. They review all debt requests from all local governments across North Carolina. Most cases they approve those. Sometimes they don't, but in most cases they do. And then once that happens, we actually go out and work with our financial advisors and our underwriters. We sell the debt on the open market. And then a few weeks after that, we go through what's called the closing, and get official approval from the LGC. So again, a fairly lengthy process and a lot of work that goes into these debt issuances. So next slide, please. So for fiscal year 2025, just want to highlight some of the actions that have either already come to council or in the midst of coming to you all right now. So back in July, you all approved the issuance of $30 million in water revenue bonds. This was primarily for the AMI project. That transaction, we went out on the market, we sold the debt, and it's closing. I think it's actually closing tomorrow. I think I put here on the slide that it's already closed, but I think we're closing on that tomorrow. We did get a very good interest rate on this issuance of about 3.65%, which is really good given current market conditions. It's higher interest rates than what we were seeing pre-pandemic. But again, given kind of where the market's at right now, we felt really good about the interest rates we got on that debt. The debt issuance that's in progress right now is the $42 million conversion of the short-term bank loan that you all approved back in 2022 into long-term debt. That $42 million has been fully utilized, and it was utilized to fund a number of important CIP projects that have taken place over the last few years. I mentioned about the Broadway Public Safety Station already. But funding from this LOBS went into or helped fund work at the Dr. Wesley Grant Southside Community Center, the City Hall Elevator Modernization Project, some of the initial work that's been done at our Muni Golf Course, and also our annual street resurfacing program as well. You all approved the initial resolution related to this at your last meeting on August 27th. The public hearing will be tonight. And then we will be asking you all for approval of the final resolution at your next meeting on September 24th. And then we'll have to go back to the LGC, get their approval, and hopefully this transaction will wrap up sometime in October. Next slide, please. So some additional debt issuances that you all are going to be seeing on your agenda for the rest of fiscal year 2025. I think as you all know, the McCormick Field project has kicked off. We're under contract there. That is a project that we are going to fund with limited obligation bonds. The debt service on that, as you all know, is going to be funded with a number of partners, the city, Buncombe County, the TDA, and the tourists. So once spending starts occurring on that project, we will likely come to you all sometime in the second half of fiscal year 2025 to get approval for the limited obligation bond issuance related to that project. So again, you all will be seeing that on upcoming agenda. We do an equipment loan typically every year to fund our vehicle equipment and technology purchases. You all will likely be seeing an action related to that sometime around or sometime prior to the end of the current fiscal year. And then lastly, since we're doing the long-term issuance of LOBS here in September, we'll need to put a new short-term bank loan in place for the rest of our CIP. And again, that will likely happen sometime before the close of our current fiscal year. So you all will, and most likely you all will be seeing 3 additional debt issuances come before you all before the close of this fiscal year. Next slide. And then finally, just a quick overview of where we'll go with the general obligation bonds if they pass in November. As you all know, there's 4 referenda that will be voted on separately by the residents of Asheville. If approved, City Council and the LGC will then be required to ratify the results of the election. That'll happen sometime in January or February of 2025. Once that has occurred, we will then come to you all with a budget amendment, most likely in February, which will allow us to put the budget in place, and then our capital projects department can begin spending on those projects. And then what we will likely do after that is, again, we'll want to put in place one of those short-term bank loans for the GO bonds as well. We will want to wait a little while to let some spending start to occur before we put that short-term bank loan in place. So right now we're thinking that will likely happen sometime in July or August of 2025. So that would be fiscal year 2025, 2026 debt issuance that you all will likely be seeing. And then after about a 2-year period, most likely, once a significant amount of spending has occurred from the GO bonds, we would come back to you all and issue the first of the 20-year debt associated with this GO bond referendum. And so that likely would occur sometime in the summer or fall of 2027. So a couple years away before you all will be seeing the first of the long-term debt issued from the GO bond referendum. So next slide, please. So back to key takeaways. I won't run through these again. Again, we'll be back in front of you tonight for the public hearing related to the GO bonds, and then the LOBS issuance, the public hearing for that, and then be back on September 24th, hopefully for approval of that LOBS issuance. So with that, I'm happy to take any questions you all might have.
Any questions?
I'll chime in I appreciate understanding both in this presentation and the last one about a lot of the process really of what it takes, which is significant and says a lot about how diligent, how thorough we are when investing in the public's money in our work. And it's nice to be able to kind of see all those steps that culminate in coming to council, and I appreciate that. It's always nice and probably a whole different a whole different task to put the numbers behind the process, because the process seems very conceptual, and so we'll see it come to council. But if we have future presentations like this, really seeing like charts with where the dollars are representing and how that flow can help us understand the process and really what the process represents in our actual borrowing capacity. But so that's just a food for thought.
All right, well, thank you all. All right, if there aren't any other questions or comments, I'm going to move on to the final item on our agenda, which is the GO bond update. And we're going to hear from Jamie Matthews in the city manager's office.
Thank you, Mayor, and good morning, everyone and council members.
Jamie, I'm sorry, Kim, did you have a question?
Oh, sorry, Kim.
Before
Sorry.
we transition?
It did cross my mind that my colleague, Councilmember Ullman, asked about getting some numbers to reflect that work. And I also would be curious to see that. So I don't know if that's something where we're going to see a follow-up in a future policy, finance, and HR committee, but extending that narrative so it's more beyond the concept, I would like to see that happen too.
And let's get clarity on the numbers and what specifically is the ask. Tony, if you understand it, I am good. As long as you understand it.
So let me, I'll take a stab at it. So I think what we can do is, if you all recall last year, I think in December, you had a CIP work session where financial advisors kind of came and gave you an overview of where we're at and showed you the multi-year CIP model. We certainly can do that again, either at the committee level or at the council level as we start through the budget process, and kind of give you all an update based on, we'll have more information around these debt issuances we're doing right now. Those numbers will be finalized, and then we can also start to model the GO bonds in more detail as well once those have passed. And so we definitely can, probably sometime in early calendar year 2025, we can be back with full-blown look at the numbers. So
I think that would be
Exactly. Okay, great. Just wanted to clarify. Thank you for that question, Kim. All right.
Great, thank you. So again, I'm here to give you guys an update on where we are with the GO bond education and communications plan. Next slide. So our key takeaways is we are finalizing all of our materials for that education program. Again, they'll include our key messages, information on our categories and prioritized projects. The printed materials will be available in English and Spanish and also on our website. We have communicated with our key stakeholder groups, neighborhood groups, and boards and commissions to share information and see if they would like a staff representative or a city representative to come and attend meetings. Next slide. So the communication materials, our website is completed and live. We've also completed a map of CIP projects, 2016 bond, and the proposed 2024 projects. Our flyers and other informational material will be done by the end of this week. And the CAPE staff have worked hard on creating some logos and icons that we will be using in those materials. And our video, again, will be completed by the end of the week as well. This is just a preview of a shot from the video. Next slide. Here is some screenshots of the website. It is available right on the city's site, and we will have links to it on all of our materials as well. This also includes places to sign up to receive information and any upcoming meetings where the bond will be discussed. Next slide. Here's a screenshot of the map that, again, I mentioned shows our bond projects and the proposed projects, so you can see where everything is across the city. Next slide. Here's a preview of the logo, some of the icons we'll be using, and the template for the flyers. We will have flyers for each proposed bond category with information regarding the projects again, and how to get more information from the city. Next slide. So our next steps, the chamber will be hosting their bond advocacy kickoff Thursday at 1 o'clock at the Oakley Fire Station. We'll be at the Festival of Neighborhoods this Saturday with bond information. And again, we've reached out to those groups to offer staff, our council, to come and attend a meeting if that's requested. We will be at the multimodal, I think on September 25th, and a couple other community groups have already reached out. Next slide. So back to key takeaways. I won't go over again, but if you have any questions, I'm happy to answer.
Any questions? All right, thank you. Okay, committee, we've reached the end of our agenda. So this is our opportunity to hear any public comment. So staff, is there anyone waiting to provide public comment?
Yes, one moment, please. All right, no one has requested to speak.
Okay, thank you. All right, well, with that, unless there are any other questions, we are adjourned. All right, thank you.